In this video, we'll look at an example on the calculation of management fee when there are exits and write-offs. Cyclone Ventures, a VC fund, seeks a 20 million euro equity commitment from a university endowment as a limited partner. The management fee is 2% of committed capital. Over the first 2 years, Cyclone draws down 8 million euros in year 1 and 12 million euros in year 2. In year 3, the fund writes off an investment equal to 15% of committed capital. The fund exits investments with a cost basis of 30% of committed capital in year 4 and 55% of committed capital in year 5. So it all adds up to 100%. Okay, if you take 15 plus 30 plus 55%, that's 100% of the committed capital. So calculate the endowment's annual management fee. So now we'll fill up the table, okay, for the invested capital, the cost basis of exits and write-offs, the committed capital minus the exits and write-offs. Then we'll calculate the management fee based on 2%. So for the capital drawdown, it will be 8 million euros in year 1 and 12 million euros in year 2. So we'll just write down 8 million for year 1 and 12 million for year 2. Now, if you add up these numbers, you will get the committed capital. So there will be 8 million in year 1 and 8 million plus 12 million would be 20 million, okay, in year 2. So based on this period, we can calculate the management fee. So management fee will be 2% of committed capital, which is 20 million. So 20 million times 2% would be 400,000 euros. Okay, so I can put 400,000 euros here. So I can do this because there is no exits and write-offs yet. So starting from year 3, there would be a write-off that is equal to 15% of committed capital. So 15% of 20 million would be 3 million. So we'll write 3 million here. So that would be the write-off. And 3 million would be subtracted from 20 million. So that leaves us with 17 million of capital. And then we'll take 17 million times 2%. Okay, so that's 340,000 euros. Next, in year 4, there will be an exit, which is 30% of committed capital. So 30% times 20 million is 6 million. So if you take 17 million minus 6 million, that would be 11 million of invested capital. And 11 million times 2%, there will be 220,000. And then finally, in year 5, there will be another exit, which is 55% of committed capital. 55% of 20 million euros will be 11 million. Okay, and that sums up to 3 plus 6 plus 11. So that's 20 million euros of exits and write-offs based on the costs. And 11 million minus 11 million will be 0. And therefore, there will be 0 management fees in year 5. Okay, so just keep in mind that if there is no exits and write-offs, the management fee is based on the committed capital. But once there is an exit and write-offs, we would have to make sure we subtract the exits and write-offs from the committed capital. Then we multiply it to the management fee.